Welcome to the Smart Mortgage Show with Bill Litton.
Now I want to get into our main discussion today, Bill, with you, and that's on questions that your lender needs to ask you. Because I think when we go into a meeting with a mortgage lender, if you are going in to buy a home and you're getting into this process and you're starting, you just kind of assume, hey, the lender knows all, right? The lender's got a list of questions they should ask me, but that's not always the case, right?
So, what we find in mortgage lending is that a lot of times people are just advertising the lowest interest rate. Okay. And when they do that, they're really almost negating all the other important things that are very valuable when you're trying to get a mortgage, things that you really need to, very valuable considerations, right? So people are fixated on rate. So if somebody just advertises, doesn't even mean you're getting that rate, just advertises this really low interest rate, that could get you to call them. And then if the rate's close or you feel like, you might be getting a good interest rate, it almost negates thinking about all these other really important considerations. So our approach is certainly a holistic financial view. We're going to offer you a very competitive rate, but we're also going to make sure that we're looking at all of the important parts of what it means to get a mortgage. So lenders should be asking specific questions to learn about your whole, your situation as a whole.
Okay, perfect. So these questions that we're going to provide you with today are, ones if your lender's not asking you, maybe it's a bit of a red flag, or if nothing else, you want to kind of bring this up and start that discussion. But hopefully your mortgage lender is asking you these questions. So first one, Bill, what's the first question that your lender should be asking?
So your lender should be asking, what is the maximum payment that you're comfortable with?
Okay. So,
and that payment is principal, interest, taxes, and insurance. Okay. So we want to make sure that from the very beginning, we're targeting the correct payment range based on purchase price and real estate taxes. And if there's an HOA or a condo fee, that's part of your housing payment. So we want to make sure that that payment is in line. And then the next question is, have you put that payment into your budget? Maybe the payment's more than what you're paying now. Maybe you think it works, but you haven't actually plugged it into your budget. And we find that it's really important to understand how that payment's going to affect your ability to buy groceries or go on vacation or do some of the fun things. We don't believe you should be married to your house, right? Mm-hmm. You don't want to be house poor. And we want to make sure that we're putting you into a position where that doesn't happen.
So you could basically get like three different answers. Like what can I get qualified for? What am I comfortable with? And then what actually fits into my budget, right? Those could be three different numbers completely.
As we saw in 2008, the lender might approve you way up here, but really that's not in your budget, right? That's going to restrain your lifestyle. And that might put some people under. That could put somebody into foreclosure. A lender, a lot of times they'll pre-approve you much higher than they should. So what does the lender say you can afford? But what's most likely going to allow you to continue to live the lifestyle you're living? That number might be down here. Mm-hmm. That's what we want to hone in on.
Yeah, because I feel like you just mentioned, anytime you go in and say, okay, what am I qualified for? I feel like whenever I've done that personally, that number is always higher than I expected. And I think that's just because of how the formula works out to what you can actually be approved for. But that doesn't necessarily mean that that's what you should be spending every month on your mortgage.
That's exactly right. And by the way, we get a lot of people who say, hey, can you just pre-approve me for the absolute maximum? That might be a really bad recipe, especially because maybe the maximum is an exotic type of a loan with terms that are less favorable. So the real question is, what's the most that you think that you would need to spend? I might be able to get you up to 900,000, but if you're dead set not going over 600, there's no reason to pre-approve you at 900.
Right.
It's not even going to give you a good It's not even going to give you a good picture so that you can make good decisions.
Okay. All right. So that first question then, or I guess two parts to that question. The maximum payment you're comfortable with, and then have you made a plan to fit this within your budget? Okay. What's the second or third question, I guess, Bill, that your lender should be asking you?
So the other question is, how long do you plan to live in the home?
Okay.
I think this is really important because a mortgage is the largest piece of debt that 99.99% of the public will ever owe money on, right? It's the biggest debt you'll ever take out. And the house is the biggest asset that you'll ever own. So with that in mind, we want to make sure that we understand the timeline, because the timeline is also going to affect the type of loan. Are we paying points? Are we buying down the rate? There's another question that comes on the back of that is, what do you think the market's going to look like? The interest rate market is going to look like in 12 months. And people are more informed than you would think. And a lot of times they'll say, I think rates are going to be high for a long time. Okay. One, you told me you're staying in this house for a long time. And two, you told me that rates are going to stay high for a long time. Then we might want to make a plan that plays into both of those factors. If you tell me that you're staying in the house for a long time and you think rates are coming down in 12 months, that's a very different plan that we're going to put together for the way that we structure your mortgage.
Okay, so that's a big piece of the puzzle, is determining how long you anticipate. And obviously life's going to change and you may end up a much longer period of time in that house or a shorter period of time. But having a game plan going in, I guess, can help you position in the best spot for their mortgage, correct?
That's exactly right.
Okay. All right, one final question then. Again, we're going through questions your lender should be asking you when you're sitting down with them to go through that mortgage process. What's our last one here, Bill?
What are your financial goals? And will this new mortgage payment allow you to continue to achieve your financial picture as a whole? And what I mean by that is, the big one is, are we getting into a payment that's too high? Now we can't fund our 401k. Now we can't take advantage of the free money that our employer matches us with on the 401k, right? We don't want to miss out on that. Okay. Now I've talked to customers that that's not part of their financial plan, and it's good for us to know that. Where I see an even bigger kind of divergence from goals is sometimes people say, I want to put as much money in the market as I can because I really believe that I can grow money at 8% in the S&P. I could be invested well in a conservative investment vehicle where there's not a lot of risk and still earn a decent percentage increase. Now, I find that to be true as well. But then they tell me they want a 10-year loan where the payment's going to be $800 higher per month, right? So there's a conflict in that thinking. The old school thinking was always pay the loan off as quick as you can. But I think there's more of a savvy financial culture that we're living in, and people are starting to think more about, I don't need to race to pay the house off. This was especially true when rates were at 3%, right? Why take 3% money and race to pay it off when you could put it in the market and earn 8, 9, 10%? So we want to make sure that everything is in alignment. The thinking is in alignment. If you really want to grow money in the stock market, we probably don't want a 10-year loan. We probably want a 30-year loan. We open up that excess cash flow every month, and then you could put that money in the market and grow the money there. So understanding the financial plan and how these things come together is really important.
Yeah, and even you mentioned 8%, but even somebody locked in 3% a year and a half ago, they could be making 4% just in a savings account at this point because of where things are now, and you'd be much better off. But I guess ultimately, though, what you're trying to get to is that full picture for somebody, right? It's not about just getting them into a mortgage and getting them as much money as they can get. It's about making sure that fits into a bigger financial picture for them so that they're going to be comfortable and happy with the mortgage they end up in. You're
exactly right. And it, I can't say that any one strategy is right or wrong. It's more about what's right for you. Mm-hmm. So we want to learn, what are your goals? What are you trying to accomplish? If somebody says, I want to pay the mortgage off and I want to do it for these reasons, A, B, C, D, that makes a lot of sense. We need to look at maybe a 15-year or a 10-year loan. But a lot of people, they want to grow money in the stock market and they also want to pay the house off quickly. And quite frankly, there's just not enough disposable income to do both. That's where we have to make a decision, figure out what's more important. Maybe we take the 30-year and I'm expecting a pay raise in a couple of years, I'll hear. Great. Do the 30-year and you can always pay extra. You're in the driver's seat. So we want to help them understand what flexibilities they want to leave themselves open to by choosing a certain loan product.
And these questions come up, I'm sure I know you are asking your clients this, Bill, and people that come in to work with you, but is this something that's part of the initial conversation you had, that first 15-minute consultation you set up at Cross Country Mortgage, or is this something that maybe comes a little further down the line?
So we actually touch on these questions in the very beginning.
Okay.
And then as the process unfolds, we address them and provide solutions to help, create a loan structure that's going to solve those issues for the customer, for the borrower.
Outstanding. Well, if you want to start that mortgage consultation process, you can do so now by calling 484-352-4151. That's for Cross Country Mortgage. Or just log on, smartmortgageshow.com. You'll find a lot more information, some great resources and tools there for you as well. No matter where you are in that home buying process, if you're thinking about getting a mortgage soon, check out smartmortgageshow.com.